surprising today, or what has caught our attention, is the fact that how NBFCs are rising, but banks have been underperforming compared to the NBFCs ahead of the RBI policy. To explain this conundrum, we're now joined by Latha Venkatesh, and of course, the rest of our top team is also here with us in our Movers and Shakers segment. Latha, it's HDFC which is contributing nearly half of the Nifty rise. What explains the up move there, and why are banks lagging?
Okay, I'll take your second question first. As you indicated, our poll showed that 75% of the market expect at least a 25 basis rate cut. Now, what happens is, in a situation where banks are putting money into the Reserve Bank's reverse repo, a fall in rate actually hurts them, because they, instead of getting 5.75 for their money placed with RBI, they will get 5.5 for the money they keep with RBI. So there is an incremental loss to them. Usually that will be made up because bond prices will rise when there is a rate cut. But there are two things which impede it. One, the rate cut is baked in to a large extent. Today, the 10-year is actually ruling lower than the repo rate. It's at 6.2. Repo rate is at 6.25. Why? Because it is already pricing in the rate cut. A second reason why bonds will not gain so much is because of the MSS issuances. The MSS bills are competition for the loose money that's lying around. So if you have more money, you don't necessarily have to put it in the 10-year. You get this one for 35 days, 28 days, where you can take a calculated view, and therefore it's a good bet that banks may put in. Because of that competition, too much of mark-to-market gains are not there for banks. However, if the CRR rollback happens, banks will definitely gain. Now, my sense is the market is not expecting a full rollback. They're expecting a part rollback and another rollback in the next fortnight. So the loss may be for 1 month. Probably because of that, you're not seeing a huge rally in the Nifty Bank. If the CRR quite positively is rolled back in the monetary policy, either in the policy itself or in the ensuing press releases, probably there'll be a little more of cheer on bank stocks. The situation is the exact opposite for NBFCs. They don't have any CRR problem. Right. For them, if there is a rate cut, there is no question of them investing in reverse repo. Right. For them, it is simply a cheaper source of money. Right. And a second advantage will also be that their customers who are also in a dibbly-dobbly state with lower rates will probably be tempted to even come back and pay and roll over and reset their rates. So any which way, the NBFCs are better off. HDFC, as the king of all NBFCs, is best placed simply because it got beaten down a lot. I mean, the double whammy of demonetization and Trump hit HDFC well and proper. It's got 75% FII ownership, and it's seen as in some ways linked to the real estate sector. So it got the rough end of the stick, probably therefore better placed to be advantaged.
All right, Latha, thanks so much for making sense of the